Here we go, another beat down stock. As you can see, Disney has been down 8% for the past 5 years. So let's go over this stock, determine its intrinsic value, and see if it'd be a good investment to add to our portfolios. Now, as you can see now for the 5-year chart, Disney stock is down about 8%. But if we take a look at the overall history of the chart, this stock was once at around $181. And right now, it might be a good opportunity to buy, although the 52-week low was around the $80 mark. So let's go ahead and get a look at the numbers. Now, first, we have to understand why the stock has been dropping. So a few years back, they did have something to do with Florida and the way that their tax structure is. They were saying it was a monopoly. So that started with a bunch of lawsuits and a bunch of politics. And that's why the stock has been going down. But for the past year, the main reason is for the revenue miss. Despite them beating on EPS estimates on Q3 of 2025, the revenue came in slightly below expectations, which was a disappointing to investors. Now, do keep in mind that the US is sort of going into a transition period that right now there's a lot of higher costs. So some people might be cutting down on going to the parks. Yet, however, that's not the only revenue source Disney has. They have Disney Plus and Hulu, and they also, as you can see now, they have an ESPN deal, which was about 10% stake to acquire NFL and WWE content. So as we spoke about in previous videos, investors usually want to know how these acquisitions play out to see how well the companies invest in their cash. So right now this is scaring investors, but if in the future it tends to be profitable, it'll be good for the stock. Also, there's a lot of talk and a lot of complaining in the streaming industry because there's so much competition out there. They don't really know how profitable Disney's gonna be, and especially them doing, I don't want to say woke, I don't know if that's the correct way to say it, but it's targeting that type of audience, and a lot of people didn't like it. So there's a lot of uncertainty on their platforms right now, but I think they will overcome this. I mean, Disney is a company that's been around for 100 years. Also, like every other company in the United States and in the world right now, there's market fears with trade risk and terrorist risk, but these are all things that are going on with every single company, so I don't really think this one should be taken into account. So if we take a quick forecast before seeing where the stock is now to what it could be in the future, and let's consider the stock to be at a moderate upside with EPS of 6, revenue of 100 billion, and obviously the catalyst for this is that the streaming becomes profitable, the parks get a lot more sales, a lot more customers, and the cost of everything comes down. As you can see here, they have a price target of $130 to $145, but this is not our intrinsic value. We're going to take a look at that in a second. Now, if you take a look here, Disney has a market cap of 212 billion with a PE ratio of just 24, which is, I think, honestly great for such a company, and they do pay a dividend yield of 0.85%. However, if we take a look at that dividend, you can see the dividend growth is 0 years. This is because they cut their dividend. Their growth rate is negative 3.8%. However, it's only a payout ratio of 17%. So once the company start getting everything set again, they could start increasing the 5-year growth rate, and you'll get paid more of the dividend. I think they could easily, with the cash they have, pay over a 1.5 dividend yield. We'll have to see where it goes in the future. Now, something that I love to take a look at when investing in stocks is the EPS compared to the stock price. As you can see in past years, even when the company was losing in EPS, the stock price was going down, and even when it was started making EPS, it was going down a little bit. But if you take a look here now, the company maintained its EPS. Yes, here a decrease of the stock, it's obviously going to go down, but now take a look at this. The company's starting to make a comeback. It has EPS of 4.91, and as we just saw in 2026, it's expected to be 6. And look at the stock price is really not following where it should be. Usually when you have movement like this in stocks, the stock price tends to be higher, just as we have here. So this is a pretty good indication that the stock might be undervalued right now, but I mean, nobody really knows. You have to do your own due diligence. But if we take a look at Disney's intrinsic value with the growth rate projection of 7.5, we can see that this stock, it is not a buy or any type of formula. They have an intrinsic value of 115, 102 in the updated Graham formula, and only $63 in the analyst revised. However, I like to buy my stocks with a margin of safety of at least 35%. So I'll be looking to buy this stock at a buy price of around $66. But if I'm real with you guys, I don't think this is very realistic. I don't think the stock will go back down to these levels. However, it wouldn't surprise me if it drops back down below 100 to sort of catch some more momentum and continue to push up. Right now, if I'm being completely transparent, I'm holding on to the stock. I do plan on selling some puts at about $100 and see how it goes from there and just collect a premium so far. But that's about it. I mean, if we take a look at the financials of the company, of the annual financials, you can see everything is pretty much in the green, even the revenue, which they did have a miss in Q3, but that's not the overall fiscal year. Again, if you compare the assets to the liabilities, which is something that we want to see in a company, of them having more assets, Disney has almost double the assets as they do liabilities, and they have a great free cash flow margin of 12% for such a huge company. And every other metric is pretty much in the green, which again, it's something that you want to see in any company. Obviously the numbers could be better, but this stock is making a turnaround from everything that's been happening since around 2020. Remember, there was a lot of things that took over the world. I'm not going to say the name of the sickness. Then there was the thing with the Florida government and governor and all that stuff, and then now the tariffs. So Disney's been on a streak of surviving. So I think once everything settles, this could be a potential high reward company. But again, I'm not a financial advisor, so please do your own due diligence. If you enjoyed the video, please consider leaving a like. Don't forget to subscribe, and as always, I'll see you in the next one.